Escobar, and I work in financial aid. I'm a financial aid advisor. Today, the topic for On Track is your money, your education, and what we decided to do this time was just really focus a little bit on student loans specifically. So I just want to get started here talking about the type of student loans that we have available. This is all through Title IV-A, which is through the William D. Ford Direct Loan Program. Our office is just across the hall, so if you have any questions, you can always go there and talk to us about these, but this is what we primarily focus on in our offices. Subsidized loans are the segment of loans where the government pays the interest while you're enrolled in classes at least half-time. Half-time is considered 6 or more credit hours. Unsubsidized loans, this is usually in addition to what you've already chosen to receive through the subsidized loans, and you are actually responsible for the interest immediately as you take those loans on each year. Parent loan for undergraduate students, it's also called a PLUS loan. Typically, this one isn't really promoted a whole bunch, so I wanted to let you know that it is available. It's strictly for students who are dependent, and the reason is that dependent students aren't eligible for as much loans as a independent student is, so this kind of levels are filled out for them while they're pursuing their degree. Okay, so some of the student loan limits here. Again, this is for a dependent student. This would be someone that's under the age of 24 and does not meet any of the requirements to be an independent student. So for a freshman, $3,500 is the maximum for subsidized loans that you would receive. If you needed more than that for the year, you could tap into the unsub amount, and that maximum is $2,000. Now, for a sophomore, the maximum goes up to $4,500 in subsidized loans. The only reason we went freshman and sophomore is because we're just a 2-year college, so typically for us, we don't have junior and senior level. Okay, and then the lifetime maximum for a dependent student is $31,500. Okay. Now for an independent student, so those over 24 or those who do meet the requirements to be an independent student, their maximum is $3,500 plus an additional $6,000 unsubsidized. So if you see here, really the biggest difference between independent and dependent is the unsubsidized amount goes up by $4,000 a school year. The independent lifetime maximum for independent is $57,500. Now, when they say lifetime maximum, what they're talking about is towards your pursuit of a 4-year degree. So once you get a bachelor's, they'll pay up to $57,000 while you're pursuing a bachelor's degree. Okay, eligibility, you must be eligible for Title IV-A, and this is going to be determined based on what you put on the FAFSA. You must be enrolled at least half-time status, which we talked about just a moment ago, so that would, again, be anything more than 6 credit hours a semester. You must have filled out a master promissory note in your entrance counseling in order to receive student loans, and this is primarily for first-time first-time borrowers. Once you've done it, then usually it stays on file for us for 10 years. Okay, the exit counseling is again something that most of you probably have not heard about because we usually don't catch people before they leave our school. But once you do graduate or move on to another college, if you'll do the exit counseling for the loan portion at our college, we'll get that updated for you on your file, just like on the same site as the mass promissory note entrance counseling. Okay, monitor your loans. There's actually a website that has all this information, and there's a lot more detail involved. I just highlighted the different things I kind of wanted you to know about the loan portion. Deferment, this is when you are enrolled at least half-time in a college, and basically you will not have to be making payments on your loans during this time. Now, if you have, I'm going to skip down to default real quick, but this does not apply to a defaulted loan. So if you have a loan in default, and you want to resolve the default, going into deferment does not necessarily clear that up. So if you're in deferment, it's very possible that you may still owe money and have to make a payment until the default is cleared. Forbearance, this is basically just a break from making payments. So if you have an issue where you just feel like you can't afford to make a payment a certain month or a series of months, you can call your lender, and typically they will extend a grace period out for you so that you don't have to make payments to give you a break. Consolidation, this is pretty much case by case, so you can contact your lender and they'll let you know what your options are in consolidating loans. If you have multiple and you want to put them into one payment plan, you feel free to do so, and I have the information down there for you to contact them if you need to. Okay, this is just some standard or some generic repayment plans. There are definitely other options, but these are the ones that the Department of Higher Ed promotes. The first one is the standard repayment, and then this one is just basically you're going to pay at least $50 for 10 years, and that's basically just until you pay it off. So it's going to be dependent on how much loan debt you actually have. Extended repayment, basically the same thing as standard repayment, except the years go out to 25. Graduated repayment is when your payments start out smaller increments and then they increase over the years. Income contingent and income based, they kind of get mixed in. Sometimes they get confused. The income contingent is going to be reviewed yearly, and it's based on your AGI. Income based, it's going to be more on financial hardship, and again, this one's going to be 10 years. The income contingent can be up to 25 years. Okay, at the very bottom, you'll see a link that I have put on here called nslds.ed.gov. This link is where you can monitor your own loans instead of having to go through us. You can go to this website, you can see what loan date you already have. You can see which schools you took it from, who all your lenders are, when you took the loans. It has every detail about everything you need to know for your loans. It also tells everything about your grants, any past Pell Grant that you've received. All that information also is available there. And then 1-800-4-FED-AID is a number that you can call if you have questions about your loan repayment once it's time for you to go into repayment. And typically you won't go into repayment until 6 months after you graduate or 6 months after you have withdrawn from school. They're pretty easy to get. You know, the government's made it easy for you guys to obtain loans because we know that a lot of students really do need it. But we just want to be mindful that whatever you do take, you will have to pay back. So we suggest that, you know, just take what you need and just be aware, because, you know, we just don't want students to get caught on the back end and, you know, have a lot more debt than they necessarily can live with. So, but anyways, if you guys have any questions, we're across the hall, and you're welcome to come and see us anytime. And I appreciate you coming.
Thank you.
All right, thank you. Bye.